Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, November 26th, 2025, and here is everything you need to know as the markets close for today. Indian equities delivered a stellar performance today, with broad participation across all market segments. The Nifty 50 concluded the session at 26,204, adding approximately 330 points or just over 1.2% in a powerful rally that brought it to within touching distance of its all-time highs. The Bank Nifty stormed ahead to 59,528, capturing gains of over 700 points and notching a fresh record high. The Sensex surged past 85,600 points, with gains exceeding 1,000 points on the back of relentless buying across sectors. What truly stood out today was the outperformance of mid-cap and small-cap stocks, both of which rallied approximately 1.4% each, signaling a decisive shift in risk appetite and a broadening of the market rally beyond the large-cap universe. Sentiment turned decidedly bullish on expectations of Reserve Bank of India rate cuts in December, combined with dovish commentary from the US Federal Reserve and a flood of fresh global liquidity seeking refuge in emerging markets. At the currency front, the Indian rupee weakened to 89.26 against the US dollar, touching a fresh all-time low and reflecting persistent foreign fund outflows, though the soft rupee is providing a silver lining for IT and export-oriented enterprises. Among the standout gainers, JSW Steel rallied nearly 4%, buoyed by strong demand signals in metals. Bajaj Finserv and HDFC Life both climbed close to 3% on robust institutional participation and strong momentum in the financial services space. 197 Communications surged after block deals signaled strong institutional confidence in the payments and fintech narrative. In contrast, Bharti Airtel declined almost 2% following a substantial promoter stake sale that raised over 7,100 crore rupees. Adani Enterprises, Eicher Motors and M&M Financial Services all face selling pressure on profit-taking and sector rotation dynamics. The mid-cap and small-cap space saw broad-based strength with names like L&T Finance, Steel Authority of India, Kalyan Jewellers, and various other players closing firmly higher, capturing a substantial portion of today's retail and domestic flows. On the technical front, Nifty 50 decisively broke above and held the critical 26,000 level for the first time since September, a breakout that traders have been anticipating for weeks. The index now targets the all-time high near 26,270 as its next significant resistance, with intermediate hurdles at 26,150 and 26,300. Support on the downside has shifted higher to 25,950, with a secondary layer at 25,850. Bank Nifty's breakout above 59,000 has positioned the index decisively near psychological territory for the next leg higher, with the immediate resistance zone around 60,000 to 60,100, support firmly established at 59,000, and an extended floor at 58,600 for any aggressive pullbacks. Banking and financial services stocks were the day's clear champions, with the sector rallying on expectations of both domestic and international rate cuts, attractive valuations, and strong credit growth tailwinds. Metal stocks participated robustly on a supportive global commodity backdrop and a softer dollar environment that benefits domestic producers. Mid-caps and small caps broadly outpaced large caps, reflecting a significant reallocation of capital into higher beta stories and a search for growth in smaller enterprises. Sectors like FMCG, realty and IT showed relative underperformance as investors rotated profits into higher momentum opportunities. Turning to the commodity complex, crude oil prices held steady around $62 a barrel globally, approximately 5,500 rupees per barrel in rupee terms. MCX gold rebounded sharply to close at 12,791 rupees per gram, marking strength in precious metals on sustained overseas demand and the weakening rupee providing a tailwind. Silver climbed to 169 rupees per gram, both touching some of their strongest levels recently and benefiting from the currency weakness and strong international investment flows. Global sentiment turned decisively positive on hopes for a peaceful resolution to the Ukraine-Russia conflict and anticipated monetary policy easing from major central banks. This geopolitical optimism, combined with dovish signals from the US Fed regarding interest rate trajectories next year, unleashed a powerful risk-on wave that lifted emerging market assets including Indian equities. The so-called Santa Claus rally has ignited across global markets, and India's combination of strong domestic earnings, resilient macro data, and steady flows from retail and domestic investors has positioned it to participate meaningfully in this year-end surge. Looking at tomorrow's technical outlook, the momentum remains decidedly positive. For Nifty 50, as long as it sustains above 25,900 and maintains conviction above today's close at 26,204, the path toward the all-time high at 26,270 looks highly probable. Bullish catalysts include further dovish RBI signals, continued global rate cut expectations, rupee stabilization, and sustained mid-cap and small-cap momentum. If profit-taking emerges, support at 25,850 should attract fresh buyers. Bank Nifty has shown exceptional technical strength, and with the index trading at 59,528, a test of the 60,000 psychological level appears imminent in the near term. The broad participation from mid-caps and small-caps adds conviction to the rally's durability. Key risks include a stronger than expected US data release, any reversal in FII flows if global sentiment shifts, or a spike in oil prices that could reignite inflation concerns. Here's your actionable takeaway. The mid-cap and small-cap outperformance combined with broad sector participation signals genuine market strength rather than index-specific momentum. Consider building positions in quality mid-cap banking and financial names on any shallow pullbacks while maintaining trailing stops as the indices approach fresh all-time highs. The breakout above 26,000 on Nifty 50 is technically significant and warrants aggressive positioning on the long side, but remain vigilant about global event risks over the coming sessions. That's your comprehensive market wrap for Wednesday. If you have questions or trading insights to share, please reach out. Tune in tomorrow morning for our opening bell analysis and first move market signals. Stay sharp, stay informed, and we'll catch you bright and early tomorrow. Until then, this is Prem signing off from What Moved the Market. Good evening.